Happy Wednesday morning, at least here on the West Coast in California. Um, Dr. K, I think you're there with us from London?
Yeah, I'm here.
Okay, everybody let me know. Okay, I guess you can all see my screen okay. So, anyways, we've been pretty quiet the past few days, mainly because there's not much of a reason to be doing anything here. What you notice happening is we're still in this chop zone, okay? So we have a sell signal that actually is still in effect from back here. So that sell signal has yet to be negated. So basically you have the Nasdaq Composite now rallying into the 50-day, and today we're reversing. Volume is a little bit lighter today so far during the day, so it's kind of inconclusive, but that's really all that's going on right now. So there's really nothing to think. And it's interesting when you run a website and you start to see some of the psychological quirks that people show in their emails, because everybody's always worried or trying to anticipate things in advance or trying to obtain some sort of certainty, and I call it the certainty pacifier. So, we'll get emails, a couple, three of them, that asking us, here, oh, the market's rallying. Are you planning on changing the model signal, or will the model signal be changing soon? Or when do you anticipate changing the model signal? And when you think about it, those are kind of absurd questions because it implies that somehow we've already made some decision or we have some information telling us when... is that you, Dr. K?
No.
Somebody's scrunching around pretty good in their seat. I don't know who that is, but comes in pretty loud. Maybe everyone can hear that. But in any case, but the implication of the question is that somehow we have some information that we're not going to distribute to the VOSI members about the MDM signal and some impending change or some secret change that's occurred and we haven't told anybody. But if you email us, we'll tell you to the exclusion of everybody else who's a member of the website. So, but I think what's interesting about these emails is not that they're absurd, but that they do show people constantly need, like a stockbroker, somebody to hold their hand, someone to ease their mind every day. And I think the lesson to take away here is that if you're going to trade in the markets, you had damn well better make sure that your psychology can deal with uncertainty 100% of the time. Because there's never certainty in the market. You go with your signals, you hold with your signals until the market tells you otherwise. Everything in between will tend to be noise. If we think something is meaningful, then of course we'll put out something to all the members right away. But all we see here is you're in the chop zone. You have below average volume on the rally, and you're bouncing up, and it's kind of logical. You come back up into the 50-day, you come back up to this trend line, because I'm sure everybody sees this ascending wedge formation and the breakdown, and now you're trying to hold it. So we'll see where we close. But all we know for sure, we have a sell signal right at this point. We're holding on the basis of that sell signal, and so far we haven't been stopped out. Any comments on the market direction model, Dr. K?
None new. Basically, it's in a holding pattern. It's on a sell signal, and it was close to the fail-safe yesterday, but close only counts in horseshoes, so it's still on its sell signal. The market's a bit lower today, and we'll see how it measures out.
Right, so that's where we're at. So we're just kind of hanging out, and I can guarantee you that we're seeing in our portfolios a huge amount of volatility, where we'll go up 10, maybe even 15% in one day. Yesterday, I think I was looking at some of the numbers down 16, 17% intraday, and by the end of the day, we're only down about 4%. But we're running these 3 times leverage ETFs, so it's a wild ride. But we can deal with it. Okay, if you can't, and you have to be emailing us all the time, it's like, oh, what do you think about today's action? The market went down yesterday and it's up a little bit today. What does that mean? If that's making you nervous, then it might be telling you something about yourself, and maybe you should dial down whatever it is you're doing. If you're using a 3 times or 2 times ETF, leverage ETF, then maybe you should just go with 1 times. Okay. Or take it a little slower. But know thyself. That's very important, and it's very interesting. We learn a lot about the psychology of investors, at least in terms of the community that we're dealing with, and it's a sizable community, well into 4 figures, now well into the thousands. It's not big enough really to make any impact in the market. It's not like CNBC getting up there and saying buy XYZ and everybody rushing into the market. You'll never really see that happen with VOSI. So it's not a huge community, but it's large enough for us to be able to get a sense of the spectrum of psychology across everyone who's in this group. So we know we have very sophisticated traders on the one hand and a lot of newcomers. So questions aren't stupid per se. All questions are good questions, right, Dr. K?
Absolutely, that's how you learn, and also it's
Right.
good to know if the question you've asked is faulty, and as to why it's faulty, because then you can learn a little bit about yourself, or you learn a little bit about the market.
Yeah, and we just signed a contract for our next book. It's actually going to be a sequel to Trade Like an O'Neill's Disciple, but we're going to go into more of a workbook, a study guide type of format, more of an exercise type of book, a little more hands-on for the reader in terms of going through the book and utilizing the information themselves within the book, as a workbook. And of course, psychology will be a big part of it. What is your ethos? What is your investment ethos? Think about that. Anyways, the S&P index, you see, what happened last week is we just came down and you tested the lows, okay? So far you would actually have to say technically this is a successful test of the lows, but it doesn't tell you yet that you're embarking on an uptrend. So all of this is still up in the air and you're just in this chop zone. For all we know, this is a bear flag, and this thing's getting ready to break out to new lows. We tend to think that the NASDAQ over here on this chart is got to probably test these lows, but the big thing with the NASDAQ is that it's being led, and that's pretty obvious today, because you got Amazon up, but I don't know, I almost feel like you should short Amazon into this bump on the news of the new Kindle Fire. Whoopie-doo. We have a Kindle at home. They're nice, but the iPad's much more versatile, and I'm imagining that Apple will make them even better, thinner, lighter over time, like the iPad 2. But it's a nice news event maybe to short into. But you see that stock up today. You see Apple actually still up 94 cents right now. You can see it down here. These are leading the market, and you can actually see the NDX has been leading the market as well. It never really broke down too hard through this uptrend line, and it's above its 50-day moving average, but it's below its 200-day moving average. So what you know here is you have very narrow leadership as far as the indexes are concerned, because it's mostly in the NASDAQ 100 stocks. And of course, those are the big growth leaders. Technology is a mainstay of the global economy going forward. So yeah, those are big stocks, and money is pouring into those, I think, maybe even defensively. But I think for the most part, that narrow leadership is not going to be able to hold the market up. So that's our view. Now, what will change that view? Well, if we get a neutral or buy signal in the model, and that's about it. There's nothing else to think about other than that, and we don't. We sit through a lot of this volatility, but we don't go, wigging or trying to anticipate it. We did get one question, somebody saying that their P&L, profit and loss, is deteriorating on this rally. Aren't we going to switch to a buy signal? And I'm not sure when we decided the model was going to be based on any particular individual's profit and loss statement for the day or the last 2 or 3 days. But remember, you can't trade your P&L, okay? If you see gains of, in your account of 10-15% very quickly, and then you see it disappear, that may just be part of what's going on in the broader trend. And we're used to that ourselves, so we don't really get hung up on 15-20% on the upside if we're running a volatile, fully invested portfolio with 3 times EPS. So, and in this market, you really have to be attuned to the volatility and kind of get yourself ready for something pushing against you. Yesterday was a wild rally to the upside, and I was shorting into it mainly because a lot of stocks were coming up into shortable areas. And if we look at some of these, let's pull up the daily chart here. Here's Amazon. You can see volume's pretty good, and it's coming up. It would be a V-shaped pocket pivot, so it's a little bit suspect here. Also, I don't like this pattern. But yesterday, we put out Cena, not Ciona, but Cena, which had rallied up into, it filled the gap from 5 days ago and up into this area of congestion. So this becomes shortable here. This is an overall breakdown pattern, so this thing's pretty much cooked as far as I'm concerned. The only thing that would make me think otherwise would be a big rally back up through the 200-day. But notice how you have the 50-day moving average just running along with the black 65-day exponential here. The two are actually meeting up here, and they both look like they're ready to go through the 200-day moving average. And that is a black cross or a bear cross or a unholy cross, I don't know, whatever you want to call it. But basically, when you see that, a lot of times when these patterns develop out and you're into a late-stage pattern that's breaking down, once you see that 50-day or 10-week moving average go below the 40-week or 200-day, that black cross often tells you that things are about deteriorate. And when you look at these stocks, let's push this guy out of the way. Let's look at a weekly chart of Cena. Remember, you had a climax top into here, and so now you're in this sort of, I'd call this a late stage improper double bottom. It's not breaking out. It's failing, basically. So late stage base failure. Finding some support down in this level, which is coincides with this area here. Okay, and so we did put this out yesterday as a short coming up into 90. So far it's working. Now, I would look for it to undercut this low, but it already did it earlier this week. So it's not clear to me whether it'll skitter along here for a while or whether it'll head for this low, which is, I think, around 73.74. So you just want to keep your eyes on that. But I do think that Cena is going a lot lower, especially if we stay in a bear market. So that's really going to be the critical factor in terms of how much money you're going to try and make off of these things, okay? So it's tricky. And I think yesterday proves that if you're going to short, you know, you better have some part of your anatomy a little bit larger than your average bear. Otherwise, you're not going to do it because you're going to be scared. But I'm looking at what's going on in the market. Light volume rally, narrow leadership. Dr. K's model is on a sell signal. I can tell you from my experience shorting that when Dr. K's model is on a sell signal, that's your best indicator that things are in sync to go on the short side. And I would actually use a buy signal or a neutral signal on the model to tell me that to cover shorts. So I would use the model as a guide on the short side. So right now it's standing on a sell signal. I'm going to go with it. And that means shorting into rallies like yesterday, especially when they look as absurd as they really are. Light volume, narrow leadership, a lot of junk yesterday leading off the bottom. So when I see that, I'm going to go after my short sales stocks, my target stocks in the short side. And so far this is working. So we'll see how this pans out. But this could get a little tricky because you already undercut this low here 3 days ago. So now this may set up a move lower. So as it comes down, be careful here because it could undercut and then try and rally again. And you would actually, at that point, if you shorted up closer to 87, 88 when we put the alert out, then you would be up a good 15% at that point. So it would be normal to want to take profits at that point. But we really have to see what happens because, like I said, this thing could go down a lot lower, and so you can decide how you want to play it. Another way to do it is, let's say I take a position yesterday and I'm short here. As it's coming down and undercutting these lows, I may cover half of it as it comes down, say, into 75, 74 somewhere. The low here is 76.48. So maybe cover half, watch how it acts. If it doesn't get back above this low, then maybe I go after it and double up what I covered earlier. So, you know, I'll tend to be very aggressive and I'll shift back and forth because, as you know, and as you've seen over the last couple of days, when they look like they're going to break down, 3 days ago everything looked like it was going to bust really hard, and it didn't. But you notice this did undercut pretty nicely, and it rallied, and that's a normal rally. That's very normal action. But if you're short, you know, you see your profits show up, and you're all happy and giddy, and then they disappear, and you probably run for cover, and then it breaks down. So it's going to be volatile on the short side. So just, you know, like I was talking about at the very beginning, and that's why I really want to emphasize this whole idea of psychology, because nowhere is psychology more important than the short side and the ability to be flexible and the ability to accept the fact that you may be wrong several times before you are right. And if you can't do that, then be honest with yourself. Go to cash, go buy some gold coins, and go play golf, you know, and wait for the next buy signal on the model. So the other one we're looking at here is Baidu. Same situation. Yesterday, rally up into the 200-day in this case. Remember with Cena, you know, when you look at these things, what's a logical rally? Where's a logical area for it to find resistance on the upside? Well, this is logical. You got a gap, so the top of the gap or the falling window, which coincides also with this little area of congestion and potential upside resistance here. Okay, so that's resistance that you can first identify on Cena, or the first resistance you can identify on the way up in Cena. Okay, in Baidu, yesterday we're looking at it, well, obviously, this low here at 125 can come into play, but you can see we gapped through it. It looked like it was not going to make it 3 days ago. It stopped right here and closed down off the top of the range. So it did find some resistance at that low, but 2 days ago, yesterday, gapped up with that huge, ridiculous gap up in the market and right into the 200-day. So you have to be on top of this thing and shorting it into that rally, in my view. And now we're looking for this low. Now, this low here on this side back in June is 114.14, and over here, the low here is 114.30. So you never undercut this low. So Baidu is a big stock, so there's a potential if it undercuts this low, it could snap back, and it'll tend to get more support simply because it is so widely loved. The bigger stocks will tend to get more institutional support when they sell off, and they can usually have sharper bounces because of that. And you have definitely seen that in stock like Priceline coming up off the lows, but Priceline potentially a late stage breakout failure. You got this double bottom formation, try to break out, it's like 7 days ago, and volume is pretty heavy, and it failed on that breakout attempt. And then we kind of drifted down, broke the 50-day 5 days ago on heavy volume, and now you're kind of sputtering around the 50-day. So this one almost becomes shortable using either the 20-day at 525 or any of the highs of these days, depending on how you want to run it. But Priceline is a big stock, and I think along with Apple, these are going to, I don't know if you're necessarily going to have as much success on the short side coming after, say, Priceline as you would with Sina or Baidu, or even OpenTable, which we've been working on the short side as well. But I would definitely be watching them for breakdowns, because I think a lot of these stocks with the NDX leading this rally and this bounce for the last, actually off the lows of August, then I would expect that any breakdown in these will coincide with a further breakdown in the market, similar to what happened back in December of 2007. So if you guys all recall, October of 2007, you had a breakdown in the market, and you had a top in October, but Apple continued higher, came out of this weird little cup with handle, then formed another weird little cup with handle, failed at the $200 price level. And that actually took the market down. The market already topped here, and at this point, this is when the new leg in the NASDAQ on the downside started to occur in January of 2008. And this coincided with Apple topping. So, now what I'm looking at here is if Apple can hold the 400 level, it may coincide with a breakdown in the market. So I keep an eye on that as a clue. I look at Priceline, which also I think is a short sale target. Amazon, which we'll see how this one pans out today. If it turns red and heads south, it could be very shortable. I don't know, because of the V-shaped pattern. And I don't. Here's the base. Let's blow this up a little bit. That's V-shaped. Is that a handle right there? No, you don't have any down weeks. So this is V-shaped, straight down, straight up. My tendency is to think it's going to fail. So we'll see what happens. But I'll be watching that for a late-stage failure as well, and also as an indicator that the market's probably in some trouble. OpenTable. We gave that to you guys up around 57, 58. It's broken down since then. Find some support on top of here, but I don't see this thing rallying just yet. And right now I'd use a 10-day. Let's look at the daily chart. I use a 10-day as my upside guide on the trailing stop. That's what I would do here. Because if it's going to accelerate to the downside, then it won't get back above that line in my view. And so that's what you want to use. Now, but you notice, if you were looking at this and you were short this, you could have said, oh, okay, the top of here, 45 or so, would be my cover point, because it's probably going to get support on there. And it went through that, okay? So if you did cover there, you'd be ticked off not too much longer later. We'll be down under 2 or 3 points. But it finally does bottom and find support there, and now we're bouncing. But to me, a body in motion remains a body in motion until something occurs to change that. Right now, I don't see that happening in OpenTable, so probably going lower. Quick overview. Hey, Dr. K, you want to do an overview of the metals for everybody?
Sure.
I'll give you my one word. Well, maybe a little bit longer. One sentence. Metals suck. There's no reason to own them. Go ahead, Dr. K.
Well, you took the words right out of my mouth. I think that we've got a lot of forced selling going on in the metals, in the precious metals, but then we saw a lot of selling going on in commodities across the board before gold and silver took a plunge. So it wasn't a big surprise, which is why we put out that real-time report that people might want to either lighten up or sell their precious metals altogether, because we saw them both being very tenuous a number of days ago. And again, if there's some people who have been holding these precious metals for years, and if you're one of those, that's fine, because as far as the long-term uptrend, I do still believe it is intact as long as central banks continue to print money, and they will in spades given what's going on in Europe as well as in the U.S. So that is the biggest tailwind that precious metals, that gold has in its favor. Therefore, this long-term uptrend that began in 2001, I think will continue. And who knows how long, but I don't think there's an end to this long-term uptrend. But in the meantime, there's going to be a lot of volatility, and gold and silver are going to form basing patterns of varying depths. And right now we're seeing gold close to the lows that it hit 2 days ago. So it's probably going to trace out some sort of basing pattern from here, and it might take a number of months for it to set up and break out again. But I think that is the pattern. That has been the pattern since 2001. If you look at a long-term weekly chart on gold, and as long as the money keeps being printed, that pattern should continue.
Theoretically. So for me right now, the long-term trend in gold, you can see in the GLD, the long-term trend is holding. We tested the trend line earlier this week when you went down to about 1524, I think, on the futures. So the bottom line is, it's nice at this point. It's nice to talk about them, but there's no reason to own them. So, and I'm not really even thinking about them, and I won't be thinking about them until a few things happen, and it's going to take some time. So I'll be on Fox Business News tomorrow at 6:30 a.m. Pacific, right at the opening. So I'm sure Stuart Varney will, ask me the question. Are you prepared to admit that you were wrong? So. I'm actually going, if he does ask me that question, I'm going to do what the Solyndra executives did in front of Congress and just take the fifth. So, but I think he gets fixated on this idea that you have to make a prediction and it has to turn out right or you're wrong. Whether you were right or wrong on anything is dependent on whether you made money on the trade. So we've made money on gold and silver and quite a bit of it. Now's the time to be out of those, and we're looking to make money right now on the short side of this market.
Also, you could always refer to that report we did send out, a timestamp report, advising that people should lighten up or sell their positions in precious metals because it was looking precarious. And in other words, just because we're bullish on something doesn't mean we're going to be we're going to hold the trade for 2 years. You can trade in and out around a core position, for instance, and certainly enhance your returns that way.
Right. So. I may ask Stuart if he's prepared to admit he's wrong on Microsoft, but he may take offense at that. But anyways, well, it'll be interesting to see how it goes tomorrow. But 2 weeks ago, I did tell them point blank that the metals could get crossed up by forced selling, and in fact, that's what happened. So Stuart takes a week off, and he's still stuck in whatever I said a month ago. And I think that gold probably would have gotten above 2,000 on that last blitz to the upside if the CME hadn't raised margin rates, and they continue to do that. And I think that takes a lot of the wind out of the sails of precious metals. But the fundamental theory behind owning them, of course, is as an alternative currency. And, everybody assumes that the dollar is just a piece of paper, and maybe it is, but what if the U.S. decided to embark on a great military venture against the rest of the world and take over the rest of the world? I guess there's always the military premium in the currency, so I don't know. There's also the old adage that you can intellectualize about how things should come to pass, but in fact what ends up happening is what nobody really anticipated. So you can intellectualize that, yes, if the dollar is a paper currency, then it should continue going lower and gold will continue going higher over the long term. But in practice, that may not necessarily turn out to be the case because there's so many bizarre dynamics involved. And you see that whenever the dollar starts to rally every time there's trouble in Europe. So RAX, people asking about RAX. I mean, RAX is still in this position similar to the market, so it may break down. It tried to rally and was shortable rallying up into the 50-day moving average. So is it still shortable here? Yeah, but your risk is higher, since here, if you're shorting into the 50-day moving average, you're using that as your guide for a stop, and so it's closer at the time. So if you come in late, you're going to be taking on more risk. So, size the position appropriately. But if you look at RAX on a weekly chart, you got this big domey type head formation. You could also consider here's a double bottom base, and it fails. So it's a late stage base failure. And what's the flaw here in this base? Well, I can see it right away, actually. And that is most double bottoms, in particular after you had a long move, most double bottoms should have 4 to 5 weeks on the left side here before you make the first low. And here you're down 1-2 weeks, and that's your first low in the W. And that's too soon. It should have occurred somewhere in here because that gives it more time. So when it's a shorter duration double bottom, boom, boom, 2 weeks down on the left side and another 2 weeks down on this part of the W, and then boom, back to new highs, that's probably too premature. especially with a late stage type of formation. So what happens here, it becomes very shortable. It breaks down. Notice it's living under the 200-day moving average now, the 40-week moving average, and notice here's the black cross. So this may be getting ready to break to the downside, but for now, I'd expect it either to hold the 10-week moving average on the upside or this week's high, which is about 36.50. But it could rally to the 200-day, and that all depends on what the market does. So, so everything's pretty dynamic here, and it continues to be this way, and very choppy. So you're kind of playing these, and then you got to either be patient or trade them short-term on a tactical basis, coming in and out of heavy positions. So some other questions real quick. We're only going to 10 o'clock. That's the idea of the day. We don't need to waste a lot of time. Here's another one. Yeah, that could be shortable into the 50-day, I guess. This is this is probably a big, ugly head. So I don't know. These are your left shoulders or up here, and then now you're making a right shoulder. It might take longer to break down, but it's one of those. And there are a lot of patterns that look like this. So I think you got to pick the ones that are the best. So if something was a big winner or a big leader previously, and this was, and this might be a good place to come after it. So let's see. Temporary. People are asking about temporary impact from quarter end. End of September, maybe. I don't know. We don't really pay too much attention to that, but you might have some portfolio dressing into the end of the month possible. But that's not going to change how we handle it. We're not going to sell out our inverse ETFs just because we're afraid that there might be a little buying at the end of the quarter. Why is it that junk stocks lead weak rallies instead of leaders? Because it's a junky rally, and that's one sign. So causality is a little bit reversed there. Really, the rally is caused by the junk stocks. So
yeah, the junk stocks are oversold. So on a dead cat bounce, it's the ones that are going to perhaps outperform over those few days on the dead cat bounce.
Right. So Netflix still breaking down. There's not. We talked about this one. We gave this to you guys back on. Where are you? Where's my daily chart go? Where did it take off to? There it is. Yeah, here we go. This thing looks to me. It's a dead cat splat. It's just kind of making this reverse high type flag, and it doesn't really want to rally. So I'm almost thinking this thing's heading down lower towards 100. You could always try shorting it here. Use the high or the 10-day moving average as your stop, because now that's at 137. So that's coming down very fast, you'll notice. But this looks to me like it may want to head lower. So we gave it to you up here. Once it's down here, let's take a look at this on a weekly chart. Where are you coming into? You're coming down on top of this structure here. So the question is whether it's really going to be able to hold or not. And how long it's going to take to bust through that. It may do it quickly or may not. So we'll see what happens there. Let's see, some more questions here. Fossils, another one people are asking about. Fossils just underneath trying to hold above the 50-day right now. Well, that's it on the day. It's not really doing much anything, so it becomes shortable up as it rallies up into this level here. So nothing magical there. It's just flopping around. You can see the weak volume rally today. So here's a question. Can you using 2 to 3 stops, which should stops be intraday or end of day? Stops can be wherever you want to make them, So it doesn't have to be anything, and it doesn't guarantee that your stop is going to be foolproof and that you won't get stopped out, and then the stop will go up a little bit more and then turn around and blow to the downside. So there are no magic stops. So is it time to add the gold? No, there's no reason to be buying gold at all or even thinking about it. Unless you're seeking to diversify into gold as an alternative currency, then maybe, yeah. It's a possibility. Let's see. What are the questions here? Would you look at ZSL to play silver short? No, I wouldn't. Too volatile. What about DEC and fossil? Well, DEC's gone because that stopped us out here. You could short it up in here, but once it gets past there, you're stopped out. So I wouldn't mess around with it. There are other ones to go after. Here's a great question. You should suggest to Stuart Varney that he subscribe to your newsletter and would have seen your recommendation to lighten up on gold. Good answer. I think I'll do that tomorrow. Thoughts on Meili, M-E-L-I. Well, let's see, thoughts. Well, it's breaking down again, so rallying up into this possible resistance. If you look at it on a weekly chart, you got its big head and shoulders formation. So, and 60 seems to be upside resistance on that for now. So that's the way I would read that on a chart. Go through some names people are bringing up, some tickers. UFS. I mean, it's ugly too. There's a head and shoulders formation here, obviously, and the 50-day now, 10-week moving average coming below. So you might look at that as being resistance on the upside, or at least the high this week. So HS. A lot of these, oops, HS, not HSW. I mean, would this meet my criteria? Yeah, I mean, it's a big leader, but I like something like a Netflix. That's like the real big leader, the one that everybody piled into. A lot of these healthcare stocks, there are other dynamics in these, and so they don't really hit my radar screen here, even though the weekly charts are showing weakness. But that's pretty typical for the whole market right now. Soda, yes, very popular one. Soda's in a head and shoulders. Here's your left shoulder, your big head. This is classic stuff. And now you're starting to roll over in the head. You're way above the 50-day, but what do you notice? The 10-week here, 50 days, dropping below the 40-week or the 200-day. So you have a black cross, and that's looking gnarly. So probably heading lower. The other thing, you see this area of congestion on this side. Well, the lows now, I think, probably at least coming up in along the lows of this pattern for a good 3 months or so, maybe closer to 4, but you can see that that's probably resistance. So it's not going to get back above that. It doesn't look like. So this one's pretty ugly. I think this thing's heading for 30 probably. That would be 20% on the downside. So still going through some. It's 10:02. We want to regarding the market direction model, Dr. K, and using the leveraged ETFs. Do you in any way adjust your levered ETF position when the signal does not manifest relatively quickly, and the short-term up move erodes the levered ETF return due to the mathematics of the daily reset? How about it, Dr. K? What's your answer?
Yeah, well, generally I will initiate a position, and if the market direction model, if the market doesn't go up when the market direction model has signaled a buy, if it doesn't go up immediately, that's no indication that I'm going to lighten the position, because sometimes these movements take time to manifest. But what I do watch for price volume action in leading stocks. I'm always monitoring essentially the buying and selling pressure pulse of the market. And so what does cause me to change my position size in an ETF is, for instance, if I start to see in a buy signal situation a great new leading stock breaking out or issuing a pocket pivot of some sort, then I'm going to buy into that. And if I'm a bit heavy on the ETF or ETFs, I'm going to lighten up those ETFs to make room for that new stock. And on the sell side, if the model has a sell signal, and let's say I go 50% in an ETF on the sell signal, it depends on the market environment again. Sometimes what will happen is the market will come off, and then it'll retest, it'll come all the way back up to where the model issued the sell signal. And if I think that's a very weak bounce, I might double up the position right on the spot and might be sitting on a 100% position in that same ETF. So it's all context related in relation to the market dynamics.
So in other words, there isn't a black and white answer. It's
there almost never is a black and white answer.
Yeah. Any comments on rare earth pounding? No, but they're nice shorts, aren't they? Looks like it. I don't know. This thing looks like a short to me. And here you got it's I don't know what you call this, a late stage failed pattern, a kind of a big ugly head here with a left shoulder. I don't know. This looks ugly. They look ugly. I wouldn't be buying them. But they're going on my short list. MCP is on my short sale list. I shorted it on this break last time. Notice how you get the black cross, and then the next week, boom, it breaks down. But I shorted this move and made a quick profit, and covered a little too soon around the 40 level. But because it's undercutting these lows, and you're thinking, okay, it's going to rally from there, and it never did. So and that's part of the frustration in short selling sometimes. So you take what you can get. ACOM just breaking down. You can see a rally back up into, you could call this a neckline here, running across. Let's do my little pencil here. I hate this thing, actually. But, you get this neckline and rallied up into just a little bit above, and it's rolling over again. So CMG, thoughts on CMG? Deep thoughts or shallow thoughts? Can you be specific, please? You know, here's one that's trying to break out. Maybe it fails. So I've actually messed around with this, just testing it up in here, and it, you know, and I make a little money shorting it, but it doesn't really break down. It looked like 3 days ago it was going to bust to the downside pretty seriously, and it never really did. You know, but there wasn't any volume supporting it. So I would be watching this. This might be another name, you know, with Apple, Priceline, Amazon, that if it breaks down, you really are putting another nail in the coffin, and so it's going to really seal the deal there. But we'll see. Somebody asked why Fox doesn't have my videos up. I think because last time I actually got cut off because Solyndra, there was breaking news, and I got booted off. So I really didn't get to explain to Stuart what the situation with gold really is. So somebody asking about iSurge. iSurge is another one of these big NASDAQ stocks to watch too, and if it breaks down. And these things look like they're floundering a little bit, but you know the jury's still out. And the jury's still out on the market breaking. The NASDAQ's negative today here. You can see that. But the NDX is holding up, mostly because you got Amazon. I think, is Apple still up, everybody? Or is it down? Yeah, it's up a pinch, $1.75. That's nothing. 0.5%. So, you know, we'll just see how this thing pans out. But it's kind of interesting. It looks weak, and I thought yesterday's action was very weak. So, a couple more questions, and we're going to wrap it up. Jazz still acts well, but we're not buying stocks. So, you know, I'm not shorting it either. Let's see. Last question. It was my understanding that BlackCross was a declining 50-day moving average down through declining 200-day. Well, usually, in order for the 50-day to cross below the 200-day, they pretty much have to be declining. Do the math. I don't think you ever have an ascending 200-day where well, that could happen, but I think at least the 50-day would be declining. So I don't really see that as a factor. It's also with the context of the pattern. You know, if it's happening in the right shoulder of a head and shoulders pattern or later after a late-stage base failure, then I think it's going to tell you something. In and of itself, I don't think it necessarily tells me anything when you don't have the right setup with it. So anyway, so that's basically where we're at with the market, you guys. You know, we're just letting things play out, and we're not getting excited. If there is a change in the market direction model, we'll let you know. So no need to email us asking us if we've made a change to the model when we haven't emailed it to everybody else. So we don't do anything in secret, and we don't provide people with inside information, as in, yes, we're going to change the model in 20 minutes. So when we do it, you'll all know. Okay? Anyways, you guys know where to get us if you need us, and we'll catch you next time. All right? Take care.
So long, everybody.
The organizer.